two topics. One is how to set a stop or how to handle a stop loss in both short term and long dated options. The second topic is just overall market. Uh, yeah, so some people are asking in the server, like, how do we set a stop loss? Um, I I do the stop loss a little bit differently. Some people say on like a lot of videos, just have a stop loss uh, same for every trade, which is not really true or really helps because uh, there are a lot of different types of markets, and the trades that we do on options are very risky and very volatile. So the stop loss is, if you just have a standard stop loss across all the trades, then you might be in a disadvantage. So I just want to cover how I do the stop losses. Yeah, so uh, just for example, so the way I do stop loss is a little bit different. I posted some of the tips in my old server, but the general way I do is for short dated options, it's almost like 50% loss, and for a little bit long dated, like 2 weeks or 3 week out options, I mostly use the levels to stop out. Um, and for same day expiry, it's I just use a lotto size with no stop loss. In that way, if the move goes in my favor, I would catch the move, or I will just lose the amount of risk that I intend to lose. So that's the standard procedure that I follow. But there are different situations where um, there could be some flexibility, or you could do different, uh, you could stop out in a different way than the regular stop losses, because the market is different around. For example, just want to give you a few examples where some of my trades went down like more than 55% or so, and then they came back all the way to uh, positive 25 to 40%. So some of the trades that I posted in the previous week, if you see, I posted Oxy puts. So for this example, um, for this one, I think I posted somewhere around here. I don't exactly remember, but it's somewhere around here. It got rejected by the 9 EMA, and I entered puts around here, but then it went back up. Uh, but I had like a week or so for the option to expire, so I just waited. But even before entering the trade, I have a level where I would just stop out and just take whatever that's remaining on the position. So this was my stop loss basically. This is where it would not go above this if the trade is still valid. The reason why I'm playing this one is it was in a declining trend, and it's making a bear flag. So that's the reason why I got into this trade. But then if it retraces back above this resistance, then the trade is invalid, and um, it makes no sense to hold the position. But sometimes because of the bear markets, it will shoot up more than this resistance, trap the bulls, and then just fall down. um, it could be that that could happen, but that's not like a normal, that could be an exception or something. But the way my stop loss is, how I manage is basically I wanted to see if this gets taken out, then I will just take whatever is remaining on the option position. Otherwise, I'll just hold it for a few days and see where it goes. So this happened. So after I got into position, it went against me for a bit, and even this one, this was, I thought this is going to break out of this level, but it got denied and then closed almost below the 9 EMA. And although it closed a little bit lower than my entry, the position is still down because the theta decay. So I held it because there's still a lot of time for the expiry. So I was hoping that it will break this 50 MA, and it did. And this was my previous target. It kind of almost tagged it the other day, and just I sold that. Although it's just not too much of profit. I think I sold it for 20% profit or so. But I was down more than 50% on this, but I sold it for a profit later. Um, so this is how the stop losses can be relaxed a little bit. Like I said, for the long dated options, you need to look at, even before entering the trade, you need to figure out what would be your stop loss, what level would be your stop loss, and where's your target level where you want to just take the profit or just close the position. I would have closed the position even it was slightly negative around here, because I think this is like a level that it bounces. Like if you see, this is previous resistance, and I'm pretty sure it's gonna bounce. But even if you close the position, if it opens later, like next day, if it opens and it start going down, then you can re-enter. So it's not a big deal that you close this with a slight negative when it tags your price target. So that's how I trade the little bit longer dated options with the stop losses. I don't have a set stop loss on the order. I'll just look at the levels and decide if I have to close the position or not. So that's for the 2 week out positions. For any longer dated, even longer dated, like 1 month, 2 month, so that would be even a little bit different. So if you see this trend is down, this is going down. So let's say I have entered somewhere around here, like I thought this is a bear flag, I entered here. So you have, for long dated ones, you have this one as your stop, right? But you can actually see the weekly, like what the level that it has to close. Even for the weekly, it's at the same level, so I would stop out for even the long dated ones. But sometimes the weekly, for some tickers, it could be a little bit higher, so you could just wait for that close to stop out of the short positions. You don't need to close it out before it takes out that resistance. So for this one, let's say you have entered, now you have entered around here, because it's below 50 MA and you're trading like 1 month or 2 months out, then you need to wait until this resistance or this trend is broken. And you can just hold it until this resistance is broken. This trend is low, like if you see it keep on going down like this, I believe this will go down as well. But if you see, this is kind of like a double bottom, kind of, it held this level. So I would not enter a short here, but I would enter a short if it closes below this 50 MA, and then you can trade it until the 200 MA tag. So the stop loss would be, in that case, you have this trend line, you just stop out when it closes above the trend line. So that's for the long dated. So the difference is basically you can look at the weekly and daily to figure out when to stop out. And it might be a fake out. It doesn't matter. You have to preserve your capital. So you can stop out even earlier if you think like market is go probably gonna go against you. You can just take the profits early, or like just leave a smaller position if you are not very confident on the trade. There are a lot of different ways you can close the position. So the way I close the position is, if I don't have enough confidence, then I'll just reduce the size of the position so I don't have to keep looking at it, or I'll just close it out and put that money into a different trade because this is very slow or whatever. So there could be different ways of closing it. But in terms of stop loss, I would just wait for the trend line break or any closer support. Like let's say it's coming over here, you know it will bounce because this is support for a long time. So probably around when it's closer to this area, just close it out so you'll have more profits. Then when when this bounces and all come all the way through the trend line, it would hurt your profits. So yeah. So in terms of long dated uh, trades, that's how I stop loss. I do the stop loss. For very short dated, let's say you're trading XPX or SPY. Um, so this one, I think I traded the other day. Um, yeah, I traded this break. Like I had like 1 day expiry, and uh, I traded this break. Basically I entered here. I entered here, it went down a little bit and then it retest back, and this is a retest. But I didn't close it out because I know this is like a 1 day expiry and it's too risky. But if the trade works out, it's gonna pay well. So I entered here this break, and I held through the next day. Like I swung the puts, and I sold around somewhere around here, and when it opened gap down next day. So for this, the reason there's no stop loss for this one is basically it's a 1 day expiry, and I don't sometimes I do put a lot of money, um, because I would be pretty confident that it will just gap down. But sometimes I'm not sure. I won't be sure because this has been falling down a lot. Has been falling for the past 2 days, and I am not really sure if it's going to fall a lot more the next day. So I was not really sure. Uh, but if it was somewhere around here, but not with this much of a gap down, but if it was somewhere around here, this break, and it looked weak, then it almost looked like a double top. So I would have put more money, and then have like 50% stop loss or so, because I'm pretty confident it's gonna fill this gap or whatever. Like if you see this gap, there's a gap here. So this break would have filled this gap here. I mean, nothing is like 100% guarantee, but the odds of that happening is high. So I will just put more money there. But here, since it had been selling off for a while, um, and I was not really that confident, I just played with small position and with no stop loss. So I don't care if it like gapped up and like went reverse, but it worked out and it paid like 100% or something. And then I played calls after I saw um, this flag breaking. Not the flag is like a wedge. This wedge broke, and I played calls on Netflix and Nvidia. I think some of people are asking why you played Netflix and Nvidia, because they are the strongest on the day. So it's pretty easy to figure out which stocks are strong and then just play those stocks on the reversal. So Netflix paid almost like 120% or something. Nvidia is almost 40 or 50%. So um, So yeah, like I was skeptical, like my market is going to go a lot down. Um, so yeah, after the gap down, it didn't go much down. Actually, it reversed. So I think it might fill the gap, but I'm not sure. Maybe this will act as a resistance, and then it will just slide down a little bit. Uh, but I'm just saying the stop loss. I didn't have any stop loss for short dated, and the position that I used is just very small, and I didn't care it gonna end up zero. But sometimes you could have a good size position and then have a 50% stop loss or so. Sometimes the gap up will be so huge that 50% loss is gonna be like a 85 to 90% loss. So it's hard to um, predict for like the swing trades that expire in one day. It's just too risky. But if you have enough profits, you could put more money and then obviously make more money. Yeah, so for the short dated, that's what the stop loss look like. Or if you are not confident, just do a lot of size with no stop loss. So these are the like routine ways of doing the stop losses. But sometimes what happens is what I do is um, if I'm pretty confident, like around here, what it could do is sometimes I will put more money because I'm very confident about the market going down. But what would happen is the market would gap down here and it will retrace. And then what people do is they just sell it off because, oh man, the market is going to go up again. No, it's not going to go up. It's just filling the gap and it will just go down back again. The reason people sell is because they play with too much of capital and it will hurt them if they keep holding. Even if so sometimes when I have larger position and I'm pretty confident, I will not sell it. I will just hold it. I will remove even the 50% loss and I will hold it. And then I'll have the stop losses around here. So it should not go above this level. If it's really, if the trade is working in your favor, it should not go above this level. So what I do is sometimes, even though it gaps down because it's gapping down to enter support, it will pop up a little bit, probably around this area like previous support. Um, and it will retrace a little bit, or it could retrace all the way to the gap level and it will just die. So in that case I won't have the stop losses. Okay, so because so most of the time what happens is if you have 50% stop loss, um, it will just take you out, and then goes in your favor after you are out of the position. This needs a very confident, and this needs more confidence. Like you cannot have uh, less confidence and keep holding it, but because sometimes what happens is it's gonna break out and just go all the way, and cause a short squeeze or something. So um, and you also should be okay if that happens, because if you put like 100% of your account on this trade and then it will, and if it's gonna keep going, then it don't make sense to hold up to this level. Or even it doesn't make sense if you're like all in this position and then it reverses. It's very hard to hold that position because you're gonna blow up your account. So don't trade with full size if you're following this strategy where watching the levels and figuring out where it could go and uh, where it could get rejected. So for short dated, that's how I trade sometimes, and I'm really confident that it's gonna go down. For example, Apple is very weird. It always have 100% retraces. Like for example, this time I kind of shorted here, I think, um, and then it went all the way down, and then next day it went all the way up. Um, but I didn't sell it. I had some time, so I sold some of the position, but I didn't sell all the position, and I was waiting for this to take off. But if you see this level, this has been taken out, and it kind of like peaked through this level, and this would happen most likely in the bear markets because the shoot up is a little bit higher because everyone's stop loss is around here, and they buy it back. The shorts gonna buy it back, and that's why you see this shoot up, and as soon as the short covering is over, you see the big red candle, big sell off again starts. So these are like in Apple, I found this really frustrating because it always retraces more than like if this is more than 100% of retracement, and then it goes back down again, and then it retraces more than the support levels, and then dies again. So this is, you need to understand how the ticker moves, even specifically. Like if you see the Netflix, the trade I posted earlier, Netflix always bounces around this level. Okay, 230 is the level that it bounces. Like if you see here, it bounced again and went all the way to 239 or so. Here as well, as soon as it comes above 230, it will just go up. It doesn't matter when, it just goes up. Like most of the time, above 230, it will just go up. So I watch these things happen. It's not like I do a random trade. So if you see the other day I posted, it gapped down, and then as soon as it took out this level, I entered the trade. This is like 232, and then it just went up. Like this is like normal thing, and for the ticker I'm saying, and the most likely the target would be around here, and so this is making a double top again, um, unless it gaps up again and takes out this level. This is most likely gonna die, I think. Like every time it comes up here it dies. If you see here, tried to break out and then died. Here this could continue because this is a second leg, like this is the first leg. Now this could go up if the market is good, or it might come down. This is like a M pattern, come down and fill this gap. So at this level I would enter puts and have a stop loss, like a 25% stop loss or so, and if it goes down you'd get paid well, but if it goes up you're gonna lose 25%. So yeah, that's why I entered Netflix the other day. For Nvidia, let's say the stop losses. So Nvidia stop loss, let's say I entered next week. I had this setup. So basically this level is what it's holding, 128, and the stock was at around 129 or something when I entered. Don't exactly remember, but the stop loss is basically I'm playing this level, because this is 1 week out. I didn't set up the stop loss. I just would watch this level, and the target is mostly this, and it reached, but I sold it even before because I had once the trade is up, I would have stops on the raise on the position, and it took out that here, like when it had this, I kept a limit stop, and that got triggered, and it sold off the position. But yeah, as expected this went up, so you could leave some position here, but I didn't leave it because I was already up a lot on the day, and then I didn't want to lose more. I mean, not more, but I didn't want to lose any profit, so I just had stops for the entire position. But sometimes if it is like 2 week out or even longer, then I would just have sold some and have some position left, because my stop loss is around 128. So yeah, So this is how the stop losses work. It's bear market. The shoot ups are a lot higher than the bull markets. And if you're playing with more than what do you call it, the comfortable amount on a single trade, then you might get panic and then sell off the position prematurely, and that could happen like every day. Like for example, what did I get so low of? Yeah, it's about ENPH, right? I had this, I had the calls on somewhere, yeah, around here. I had calls and it got capped down like 4.5%. So even though the calls are next week, they're all down like 60% or something. So my stop loss like 50% has triggered and it sold off, but it went the other way on the day. Like if you see the hourly, can't see the gap down. Yeah, I don't see too much. Oh yeah, this one. So this one I entered hoping for retest of this resistance, but the day next day it gapped down, and I was looking for this support to hold, but it just took off that support and kept going. So I didn't want to lose the entire capital, so I just sold it. But this came back up, filled all the gap here, and the position was into break even the same day within 30 minutes or so. So these things, like even though you are a good trader, this might happen. And if you're playing with like full size, not full size but with more size than what you could afford, then you would get frustrated. So stop putting too much on one single trade, and then you'll be able to manage the stop losses in a better way than just having a big position and having a very tight stop. Then you'll just have the stop loss take out and the trade would go without you. So there's another thing to remember, like if you're not good at maintaining the stop loss, then just play with the smaller size that you're okay with when if it goes to zero. um, yeah, so in ENPH I lost money playing calls because that's how the market is right now. It's just randomly gaps down, gaps up. It's kind of hard to predict. Even for some of these strong stocks, they never know when it's gonna reverse. Like if you see Apple, I thought 2 weeks ago I thought it's strongest, and I thought it's gonna take out this level, go here, but it kind of like got all the bulls here and then kind of reversed. Kind of looked it's gonna go up here, but with the Fed announcement, it just went down. Yeah, I mean it's very hard to predict like when the ticker reverses. So if I held this on this gap down, it could have been just like Apple. It might have, I don't know, but I just don't want to lose all the money on the trade. um, so I just sold it out. But yeah, this could happen for any trade. So that's with the stop loss. I think I covered most of the things that I do for the stop losses. Trying to remember if there's any other. um, yeah, even so, if sometimes what I do is, let's say for Oxy, what I did was, although I had puts, I actually played calls to hedge this position. Like I saw this, it's tagging the 50 MA, so I got the weekly calls, but I have 2 week outputs actually. So this actually paid a little bit because I was playing hedge. I was hedging this, and instead of stopping out, I just played calls on short dated, and this actually paid well because this kind of went up the next day, and it sold for 60% or so on the calls, and I saw this double top on the hourly. Like if you see on the hourly, it made a double top. Yeah, right here it made a double top, and um, yeah, this candle is like maybe it's gonna sell off, so I just sold the calls. So as expected, it got sold off, and the puts also paid a little bit. So the other way is, yeah, that's the other way. Like if a stock is moving against you and you have some time, and the setup is still valid, you could actually place short dated hedges on your trade, so it minimizes your loss. Or it would, I mean, it could have paid like if it kept on going, like the other day where it went like this candle, the hedge would have made more money than your original position. So um, so you could have done that way as well, but that doesn't happen. Like, I mean, it depends on your setups, because most of the setups that I enter, they actually end up in the money. I That's what I noticed. I mean, like anyone could trade that way, I guess. But most of the times, the trades I enter, they just go in the money. Although in the beginning they might go against me, but at the end they would just go where I was thinking it would go. But in the meanwhile, it might go against me, and that's what I do. I just play opposite on the short rated, and just gain some make up for some losses there. So yeah, that's how you play if it going against you, the short term. um, yeah, that's that's regarding the stop losses. um, Coming to the overall market, I think I was telling before, in the previous video, I was saying it could tag this 200 MA. When it broke this, I was saying it could tag this and just go up or down. So it decided to go down. Um, and also it's following this trend line. I think everyone could do this trend line. It's not a big deal. Um, but the 200 MA rejection is pretty bad here. But I was expecting a little pullback to this level, and then I thought it would go like this, like it would break out of this 200 MA trend. But it looks like, but I wasn't expecting this much of a sell off on the report. So what this tells you is basically there's a lot of sellers still who wants to sell in the market, because you don't see this much of a sell, this big red candle if there are like only few sellers in the market. So like if you see this candle, like this is a pretty big one, and it's pretty big one. Then although it had like little bit choppiness here, it went a lot more down. Same as like whenever you see a very big red candle, it might not happen the sell of the next couple of days. It might chop around, and the get the dead cat bounce a little bit, but the trend would be down following that big of a candle, red candle. So if you see, this is a big red candle, chopped up a little bit and then went down a lot more. Same thing here, big red candle. The only difference, sometimes the candle happens when it's in a sold or a sell off, like this is called a capitulation on kind of candle. um, like this, everyone thinks like, okay, this is a very big candle and it's gonna go and touch this, or have a gap down. But see this, sometimes the institutions are not ready to load off their, I mean, sell off their positions because they are caught out off guard. And what they do is they try to artificially inflate the market. So after they sell off, um, like everyone, most of the market would think, okay, maybe it's time to come down and tag this bottom here. But but um, uh, um, but if most of the hedge funds that are not really ready for this sell-off, they would artificially inflate. And if you see this buy candle here, I feel this is like a little bit of short covering, but then we have another sell-off here, but then they gapped it up intentionally. um, I mean, these could happen. Like people say, it's a manipulation or whatever, and this is all banks. They just try to, because retail is not trading like pre-market. They're not gonna move the features, or they're not gonna move the stocks pre-market. There's no way they can do it because it requires a lot of capital. And this sell-off would might have triggered on this a big huge sell-off here, but they gapped it up and made the base cover. And it sure enough, it went all the way back to the resistance. And it's the same thing again. It's like a double bottom, kind of brought it back up. And then what they do is they sell it slowly. Like let's say you want to sell your stocks, like let's say you want to sell Netflix or Tesla for $500, and your cost basis is like $400. You're not gonna sell all the Tesla and all the Apple stocks like in one day. It will just cause a big what do you call, even your P&L will look very bad, because if you start selling $1 billion of positions in a single day, and you have like 5 billion position on that stock, then the rest of the 4 billion would go down to 2 billion, which is not which is not a smart thing to do. So what institutions kind of do is they distribute, like that's what happens at the top. They kind of distribute, they sell it, like, but they don't make it look like all the way down. They just don't do that way. They kind of manipulate it a little bit, kind of sell it a little bit, buy it back on the down day, like let's say they buy it back here, and then when the price comes back up, they'll try to sell it slowly, so that people won't just sell it off altogether and just don't invest in the market. um, and it's not like a new thing. It's just how the way the market works since beginning. Most of the institutions, although they want to sell it, they're not going to sell on one day, unless it's like a Goldman Sachs that triggered the policy, or that Chinese guy capitulation. He lost a lot of money when they started selling everything in one day, like the disc or Viacom or whatever, that has gone down like Viacom. I don't even remember what's the what's the name of the I don't know if they take it out, I'm not sure. Anyway, the point is basically, if you sell everything off in a day, like if the institution sell off in a single day, they they're gonna trigger like a 30% or 40% down, obviously. So they're not gonna do it, because as they sell through, their positions will be down a lot more, and it's gonna cause like a what do you call it? It will impact them more than the others, actually. So they don't do that. So what they do is they're gonna distribute the sell off like the stocks that they want to unload slowly. They don't do it like on one day. So that's why you see like slow sell off here and there. The SPI is still at this level for like almost a month. And then some some institutions, they decide to offload more based on the macroeconomic conditions or whatever, and yeah, that would trigger sell off, and this would happen only a few times. It's not gonna happen like every month, because that would impact the institution more than the market. So this would happen occasionally, like the straight sell off. You're not gonna see that like very often. What you see is like in the sold off, it came back up, then chop a lot more, and then have some more sell off here, then again go back up. So all this is like, what I'm trying to say is basically this straight down will not happen. If you see this big candle, I'm pretty sure there'll be a lot more, but it's not gonna happen in like a week, because like as soon as you see this, people think like, okay, SPY is going to 250 or 300. It's not how the market works. What it's gonna do is it will die a little bit and then go back up a little bit, chop, die a little bit and then go back up, and then die a lot, like one day or 1 week sometimes, and then come back here. Um, so it's kind of hard to, like on the sell-offs, it's kind of hard to swing long dated. So I would advise not to do a long dated. I think I have told um, even when it was around here, I was telling don't do long dated puts around here because it's at resistance. I thought it would go here. Even here you could have bought like long dated puts, but you could also did like 2 week output and would have made more money. But if you had, for example, you bought long dated puts here, you would have, yeah, you would have caught this move, but then you would not sell it, right? Because you would expect, okay, this is going down to all the way here, but that won't happen because like if you see, it went back up again. It's almost like 50% of the retracement. It came back up, and the long dated puts would actually be down because there are like 7 or 8 days in between, and the theta decay will impact the option. So the long dated option would maybe would have made little bit of money, but not like crazy amount of money compared to like I think I posted the SPY trade here, SPX or somewhere, and it was almost up like 400% or so, like, and didn't even hold it like until here. I just sold it like the same day, but like 2 week out would have made more money than long dated puts. Any long dated put, I mean, it's the same issue. They're gonna drop and then retrace a lot more than what you expect, and it would impact the option. But if you are holding the short, like the stocks, it would make sense to just hold the short until it takes out the resistance or it takes out the trend line. But it's different for options. The high volatility would impact the option a lot more. So that's the trend. I mean, that's what are my thoughts. I don't think it's gonna um, like it's not like here it dropped a lot more and then came back up, chop, and then went back. I feel I don't know anything. I mean, I'm not really confident like what happens here because there's too much of range here. Like it bounces here, then it breaks and then comes back up. It's kind of annoying range here. But if you look at the MAs, it's easy to figure out the downtrend is still intact. Like this is sliding down, this is about to slide down. Like the 50 MA is like it's a little bit lagging a little bit, but after a few days, like it's gonna trend down, and this is trending down. So the downtrend is intact, but the way you play this is basically you short the resistance. Like there's a retracement to the resistance. You just play 2 week or 1 week outdated puts, and it would be easier to stop out if it takes out the resistance. So most of the times when I enter the trade, that's how I place the trade. Basically, I want to be really close to the resistance, or when I am going long, I want to be really close to the support, so that I would know immediately to stop out, or to just leave a um, small position, so that if it works, it pays me. I don't miss it. Um, yeah. So for like if you zoom out a little bit, this is kind of a annoying pattern. Like someone could say this is a invert shampoo. Like this is her left shoulder, kind of right shoulder is kind of invalid, but if you take this pivot here, it is still valid. Like this could be a right shoulder, I mean left one, this could be a right one, could be a fake breakdown, and this could go all the way up and fill the gap depending on what the FOMC is gonna do. So that's the other thing. Like this market is very unpredictable. Uh, it fakes out a lot, and it doesn't conform to the fundamentals too much. It's like I was thinking the inflation is gonna go down, but the data shows it's not down. So I stopped thinking about the fundamentals. I just want to play the levels, take it like maximum is like swing 1 or 2 days and sell it off if it's not working, and don't have any bias towards long or short. This bottom could be this could be a bottom, or there could be if you see the weekly, see this weekly, um, this is a bearish engulfing, and it could be bearish engulfing, but this is happening in the middle of the range, so it's not same as the one here. Like this is happening at the top. I mean, hindsight, this is the top, but if you see the trend is up, right? So that's how you know this is like a kind of top. Like the RSI would be high, since there has been buying for a couple of weeks. So this bearish engulfing is not same as this bearish engulfing. This is happening in the middle, and it would be for the novice traders. People they would think, oh, this is a bearish engulfing and it should go down, because this is a bearish engulfing. It doesn't work like that. It's not that easy, because they don't actually operate that. I mean, it's not like 100% thing. So let's say, so if you see this one, this is also a bearish engulfing, and what happened next week? Like it went up, almost retraced back to the more than 50%, and then back down, then back down and retested, and then back up, and it continued. um, yeah, this is so even this one, uh, so the place where it worked is, I'm trying to find out, like, so this is bearish engulfing, and even this one had like almost for maybe 30% of retracement before it died. Yeah, so bearish engulfing is not like 100% unless it happens like on the very unless it happens when there's a lot of buying, and you see a bearish engulfing, that would mark the change of trend. But I'm not saying it's not gonna go down, because anything could happen, right? It's not all I'm saying is, don't see this and determine that okay, this is gonna die, and just don't buy like too many long dated puts or something like that. I would say just buy 1 week out or 2 week out, and see if this this resistance is taken out, or like if it gets rejected, then you might enter, like you could enter a few 1 week or 2 week out and then play it until here. I i think it's gonna bounce here again, I don't know. Or it could bounce here or somewhere. I think these levels are um, pretty apparent, good, but but in few weeks, um, I think it, I think market is going to test these levels like 370 and 370 and or or this or this 200 MA on the weekly. Um, like that's what I think I was saying earlier. I posted on Twitter too. Like once it takes out the 50 MA on the weekly, it most likely tags this 200 MA. There's no way that it could. I mean, it happened few times where it didn't tag the 200 MA. Like this one, it um, it went down and didn't tag, but then it came back up, back down, and then almost close to the 200 MA. I mean that like even here it was like went down, tagged the 200 MA, had a lot of chop, and then it was never like for a long time it was never under 200 MA, but this is almost a certainty that once it breaks 50 MA it's gonna tag 200 MA. So same thing I was expecting. What I'm expecting is it's gonna tag, but I don't think no one can get the timing correctly because it could happen next week. Like JPEG could trigger a sell-off, big sell-off, and they could just die like all the way down here, or he could say something bullish and it would stop out all the bears and it would go up here and tag this trend line again, and something happens here and then just die. I don't know, but it's kind of uh, hard to predict when it would happen. But uh, but only thing to remember is the downtrend is still there. I don't think there's short of bottom here. So what would happen is it might chop a little bit and go down here, or it could go up a little bit and go down. Yeah, it's not really helpful. I think if you're trading short-term options, I don't think it's much helpful. So I would just do the levels instead. So for next week, my plan is to see if it's gonna gap up because the momentum is up a little bit from Friday. So that's gonna push the algos to buy, like cover the positions, something like that could happen, or there could be some news and then it could cause a cap down. So cap down would be most likely go down here and tag this level. Um, if that doesn't hold, then it's gonna gap down all the way. I mean, not gap down, but it could go down all the way around here, like 373. Make a. I mean, in that case, it would as well go here, but it's not gonna happen in the straight line, obviously. But for Monday or Tuesday, I think this is going to probably gap up to here, like, and then sell off, sell off, or it could keep going and tag this 9 EMA. Like if you see this 9 EMA, it's pretty close, around 395. Yeah, if it holds 390 and goes up, then might tag this 395 area. Yeah, so the next week is kind of very volatile, I guess. So I would just play small, um, but the chances of this going up and tag this 9 EMA and the trend line are pretty high, considering the buyers that we saw on Friday. Now this could be OPEX thing. It could have made the MMs to to pay out the puts more if the market has died like completely. So they just held it up here instead of paying more. So they could have they could decide like next Monday they could just cap it down because the options have expired. So there's a lot of things that could impact. I don't know. I just know that trend is down. So whenever it comes to resistance, I would just short it. That's it for today. Thanks.